Tesla stock is down about 7.5% at the time of recording this video. Holy moly. Then I see this article. Tesla stock slides 5% after fresh volley of price cuts and discounts from the EV maker. That is not why Tesla stock is actually down today. There is two real reasons why Tesla stock is falling today. Here this morning, several news outlets reported that Tesla sold about 60,400 cars from its plant in Shanghai in February. That is down about 19% year over year. However, last year, the Chinese Lunar New Year was in January, and this past year, it was in February, and that does tend to have a big impact on people actually buying vehicles. And listen to this. This is actually hilarious. Financial media hates Tesla, and they absolutely hate Elon. BYD reported February deliveries this past week. This is actually laughable. Sales of all battery EVs in January and February dropped about 1% year over year. BYD had a relatively stronger January and a relatively weaker February. Nowhere in this article do they mention that BYD's sales in February for purely EV vehicles dropped 40% year over year. So Tesla was 100% better year over year than BYD. For whatever reason, they just don't put that part into the article. So no, this is not a Tesla specific problem. Tesla's actually the best year over year loss, if you will, out of all of these China EV competitors. I mean, for a company like Tesla that is quote unquote getting their lunch eaten by BYD, Tesla slumping 19% year over year for the month of February sounds much better than the 40% slump that BYD just had. Before we get into the second thing that is affecting Tesla stock negatively today and is also affecting other stocks, I think we need to do something. I heard that 10 shares a day keeps the FOMO away. So that's what we're going to do. At least buying on these kind of dips. And boom, we're purchased. 10 shares, $186.96, almost $1,900 for the total cost. That brings the YouTube portfolio, the portfolio that I'm trying to acquire more shares of Tesla stock in. All of the shares that I bought a long time ago are in TD Ameritrade, as well as Public. Did a lot of buying over there at much lower prices many years ago. Currently have about $8,500 in this portfolio. If Tesla stock currently, continues to fall, I plan to put a lot more money into Tesla stock, but I do want to keep some dry powder on the sideline here as the chart for Tesla just broke noticeably to the downside, but more on that later. But here in this portfolio, my average cost for 45 shares of Tesla is about $219 per share, and currently down about $1,500 or about 15%. Now, if you want to know the real reason why Tesla is down 7.6% today, it's actually pretty simple. Nvidia, SMCI, Intel, Dell, your semiconductor AI stocks are soaring. The FOMO is hitting unprecedented levels. Right now, it's all about chasing. It's not about fundamentals. It's not about anything else. It's about chasing the hype. I've explained this many times here on the channel, and I will do so again. When there is this much hype around AI stocks, and there is $6.2 trillion in money market funds, I like to call it investable capital. You can sit there and say the money supply is $20 trillion, whatever, fine. But how much of that is actually investable money? If you think about the average people out there, how much of their money in their bank account is actually going to be invested into the markets? The average person, while about 50% of individuals don't invest at all. Another 40% of those invest in what you'd call like a 401k or an IRA. Only 5 to 10% of at least the US, and likely a smaller percentage for other countries, actually actively are investing in trading. I would actually argue the number's probably a lot smaller than that. Maybe 2 to 3% of citizens in the developed world are actually trading stocks. So you have $6.2 trillion of, as you know, investable capital because it's already in money market funds that is outside of our markets. That is 3 NVIDIAs. That is over 3 NVIDIAs. That's over 3 Russell 2000 indexes. So there's a lot of money that has been pulled out of our markets in recent years. To get NVIDIA to go up 5.5% in a day, to add 50, 70, $200 billion of market cap value, that's kind of what we've seen lately with NVIDIA. Almost every single day, it's between 50 and $100 billion going into NVIDIA. That money has to come from other areas of the markets, and it's starting to get to a very extreme level. I mean, take a look at today. Anything that is not deemed AI is getting smashed. It's not just Tesla down 7.5%. It's Google down 3.5%. It's Apple down 3%. You've gotten to the point where you've sucked basically all of the money you could out of your small and mid cap stocks to a justifiable point. And now to just sustain this AI rally, this NVIDIA, SMCI, Intel, Dell, ARM, Broadcom rally, right? There's many other stocks. But just to sustain that at this point, the sheer dollars that are going into AI, you're starting to see selling in other big tech names that are deemed as the losers of AI, which is Tesla, Apple, Google. I would argue Tesla is the best AI stock out there, and eventually the markets will realize it. And that is why I am looking to acquire as many shares as possible in Tesla stock right now. Now, I just want to be blunt and honest with you guys. If you are chasing the AI trade, you're playing a nasty game, okay? A nasty game of musical chairs. I wanted to say something else, but YouTube would probably demonetize me, shadow ban me if I even said that. But you're playing musical chairs, and the music is about to stop some point here in the near-term future. When you get to this degree of FOMO, it can only go so far. When investors are selling Apple and they're selling Google, other high-quality stocks, Google a little bit more high quality than Apple, in my personal opinion, as far as, Google's actually growing, Apple is not, so it makes sense. Apple should be lower even than where it is today. But Google, I mean, you're past the point of just a little hype. You're in full-on bubble territory. As I've talked about before, and I will talk about in the future as well, up until likely March 12th, you're going to get the lockup period for ARM, and that's going to be a big catalyst for really the AI sector in general, because if SoftBank does sell a lot of ARM stock, which I'm expecting they will, I don't find it logical at all that SoftBank's just going to sit on their ARM position, 90% of the company that they own, 929.7 million shares out of 1.03 billion. No, ARM's going to sell. Even if ARM sold 1% of their position, that would be equivalent to about 10 million shares, about 9.2 million shares or so. The average volume on ARM is about 15 million shares a day. So even if they sold 1%, you're going to double the average volume in a day, and all of that increase to volume is going to be selling pressure, let alone if they try to sell 2% in a day. Then you're over your daily average volume you've seen since it IPO'd. There's no good ending for that. That will never end well in any universe, on any planet, on any stock exchange that you trade on. Even if we are trading on Mars one day, that's never going to end well. We are also going to have some earnings this week. Today and after hours, you have GitLab, which a lot of investors consider that somewhat AI. It's really along the lines of code. It's pricing in like 20%. Stay away from that thing with a 10-foot pole, in my personal opinion. You have Neo and Target tomorrow pre-market, CrowdStrike and ChargePoint, as well as Ross Tuesday and after hours, JD.com, Abercrombie & Fitch, Foot Locker and EVgo Wednesday pre-market, Victoria's Secret and Honest Wednesday and after hours, Thursday pre-market, Kroger, Big Lots, Burlington, American Eagle Outfitters, Billy Buy and PaySafe. Thursday and after hours, that's where the AI trade could get derailed a little bit. You have Broadcom that reports earnings, as well as Marvel. These are both semiconductor companies, software-ish related companies as well. Again, focused around AI. If they have bad earnings or even good earnings at this point, these stocks have run up a lot, they could see a bit of a reset. Think about what happened with NVIDIA earnings. I was confident the stock would sell off after earnings. What happened? The stock sold off about 10% before earnings. I didn't expect the 10% drop before earnings. So what happened? NVIDIA fell 10% before earnings. What happened? NVIDIA rallied 10-15% after earnings because it had already sold off 10%. So your net was only a 3 to 5% gain, right? If Broadcom and Marvel and the AI sector rallies into Thursday, which I find unlikely to happen, then you probably do get a fall after their earnings. If you fall beforehand, which I think is a little bit more likely, then it's really a toss-up and will be more based on the results from Broadcom and Marvel to what happens with AI stocks. Like if Broadcom and Marvel sell off, if AI takes a breather either tomorrow or on Wednesday, we have big events coming up. That's why I think we will ultimately take a breather here in the markets, see some downside. Then, I mean, if Broadcom has good earnings, the stock will probably go up if it falls 5 or 10% before earnings. If it has bad earnings, the stock's going to fall another 10%. That's just kind of the easiest way that I'm looking at this. Now, we will be going over everything you need to know in regards to the data coming out tomorrow. The data is going to be huge. And what the Fed said that really has me a little on edge for the data coming out tomorrow and for Powell's speech on Wednesday. We'll go over that in the next video. As for Tesla stock here today, you have indeed, which is kind of ironic. I talked about this just yesterday, actually. This is a bear flag. You've had a bear flag where you're kind of in this channel going higher. You're not breaking out above the top end line, right? The ascending line of resistance. You're not breaking out above that. You're holding support at this ascending line of support. What happens? Most of the time you tend to break lower. If we would have broke higher, that would have been great. You broke lower. So as I said in the video yesterday, I'm only expecting like a $10 move or so this week. So Tesla already moved $15 today. I think we can rally a little bit, especially if maybe the data is not as bad as expected. If the data is not as bad as expected tomorrow, then you can probably see a broadening out of our markets. You may see a little bit of a breather, a down day for your AI trade as well, because that gives markets a reason for really the algos and the quants to start buying other areas of the markets. I think a lot of people are looking at semis right now, semiconductor companies, AI trades, as kind of defensives out there. If bad data comes, if a recession comes, why not buy the semiconductors that are in a cyclical growth wave? And that only works to a certain extent. When you get this overextended, this bubblicious, if you will, I don't think you can make that argument. And to the credit of those of you guys that don't like these videos, that have negative things to say in the comments every single time a video is posted here on the channel, you're correct. I did not expect Tesla stock was going to fall 7.5% today. I think if you're looking at Tesla on a 1-minute candlestick chart, it becomes a little bit more obvious to what likely was appropriate for Tesla. This is when the news came out about the China, deliveries, right? Or China sales for the month of February. This was an appropriate fall from about 203 in pre-market, 202.50, down to about 198. This was that, I guess, initial reaction from the February number, because after all, if you actually look into February's EV sales in China, Tesla was the outperformer of them all. BYD dropped 40%. Tesla dropped 19%. 5% better than BYD on a year-over-year basis for, a company apparently, as the bears will say, is eating Tesla's lunch. Doesn't sound like it. This selling that you've seen today, all of this is what I would call your selling of large cap non-AI or just losers in the AI space to buy NVIDIA and SMCI and the stocks that are doing well. So no, is this justified? Tesla stock falling 7.5% today. Does the news actually make sense to why Tesla's down 7.5%. Is that justifiable? Absolutely not. And I do think some people are going to be confused here, and they're going to think that this is justifiable, that this is not AI related selling of Tesla to buy other AI stocks, or Apple or Google for that matter. That's why I really wanted to point that out. This news we got today for Tesla is actually not bad at all. It's not bad news. Sure, could it have been a little bit better? Of course. February was the Chinese New Year. January numbers were just fine. January numbers were fantastic for Tesla in China. And I'm sure in March, we're going to get right back to the same old. That's indeed why I bought the dip in Tesla stock today. I bought 10 shares on that portfolio that I showed you. I bought another 10 in public, and I bought another 10 on TD Ameritrade. Especially as we get closer to the first Fed rate cuts, and ultimately, if the markets are correct here, if we're picking up the same vibes, and we actually do get a soft landing, well, rate cuts, soft landing, should dramatically help out the consumer to be able to buy Teslas and thus help out Tesla stock. And ultimately, as Tesla stock gets cheaper, the valuation also gets lower. So right now you're buying Tesla at a record low valuation. You've never seen Tesla trade this cheap before. I think it's also important to remember that you make money when you buy a stock, not when you sell a stock. With that being said, on a technical basis, I am expecting Tesla's going to find some support around here. 187 today looks like a lot of support, at least right now. Could you fall to 185? Of course. If we get really bad news tomorrow, bad data, bad Fed Jerome Powell, could you fall more than that? Of course. You could fall back to 175, you could fall to 180. I'm really not expecting much of a drop under that. If things got really bad, this downtrending line here, this lower end line of the channel, could take you back to about 165 or so, 167 or so. That would be like the worst possible scenario. If Tesla did fall to 165 this week, I would expect the markets to have also taken a sharp move lower. Honestly, I have to say this is the strangest stock market crash that I have ever seen, because most stocks are not doing well. A lot of higher quality stocks are even selling off today. Some of your big tech stocks as well. It's just strange, this market. Also, generally speaking, I like to buy stocks when everyone hates them. I'm a fan of buying low and selling high, or buying low and, well, letting stocks rise and then borrowing against my portfolio for 3% or 2% as a collateralized loan in the future. But that's maybe a topic for another video. That's getting more advanced into the structure of money and the structure of capital and how you can benefit just from buying stocks today. Big congratulations to you guys actually buying stocks. If you did not see my post that I put on YouTube, about 95% of you guys are males. Maybe 5% or so are females. That's what YouTube analytics tell me. Who knows if that's accurate? Shout out to you guys and for doing this for your family. Ultimately, if you're like me, you're not doing this for yourselves. You're doing this more for your kids, your family, take care of your mom and whoever else. I just want to say, because not a lot of people tell guys this, but you're doing a good job. You're doing a good thing here, I believe. If you're a female as well, I mean, you deserve credit also, because I don't know a single female that buys stocks at all. I just want to say you're ahead, and your family thanks you, and I will let you know that for them in case you're not told that. I've never been told that, so I feel like especially now you probably need to hear that. Sentiment today on StockTwits for Tesla is 35. That's categorized as bearish. 1 day ago it was 49. That was neutral. Message volume today is higher. Yesterday it was 34. That was low. And today it's at 49, which is categorized as normal. Participation ratio is high at 58. So what this tells me is a high participation ratio. People are definitely talking about Tesla stock a lot today. You can actually see the message volume just updated to 61. So a big jump from yesterday. A lot of people talking about Tesla, lots of messages coming through here on StockTwits, and the sentiment just went lower to 27. So people are very bearish today. And again, this is the time you want to be even more bullish because you're getting even a better deal. As long as nothing changed, Tesla didn't create some bad product, FSD is not falling apart, or Tesla's mega packs are not bursting into flames. I mean, I think this is just a good buying opportunity. Of course, could I be wrong? Could the stock go lower? Probably. Now, I also think in regards to kind of the valuation situation, it's important to remember, take a look at 2023. The average analyst consensus for full year 2023 EPS was $3.07. You actually came in at $4.30 per share. Now, full year 2024 consensus is around the same at about $3 or so, $3.07. 3 months ago, it was $3.87. This is where you can get into upside surprises when estimates have fallen this much and nothing has really changed that dramatic with the business. Okay, we haven't seen many price cuts in the last couple of months. Tesla sure did not give guidance because they don't know what demand is going to look like. I can tell you right now, the Cybertruck is seeing a lot of search trend activity. The halo effect is likely picking up for the Tesla brand. The Model 3 looks to be wildly successful in the US. I mean, hell, Jay Leno said today on the Model 3, quote, "This feels almost as good as my Model S at more than half the price. Actually, it's almost a third of the price. I think my Plaid was $130,000 when I got it. It's a little cheaper now, I guess." My point is, odds are good that Tesla is going to come in with much higher EPS than Wall Street is forecasting. Even if we get, let's say, 20% EPS growth. If 2023 full year EPS was $4.30, let's add 20% to that and let's see what we get. $4.30 times 0.2. That's going to give you an additional about 86 cents. Plus your 430 back, and you're looking at EPS of about $5.16 per share. Now, whether or not that actually happens, I don't know. It really depends on what pricing looks like for Tesla. If they don't have to cut prices and they're able to raise prices in the back half of the year, that could make sense. But even if you're way more conservative and you say $4.50 per share, well, let's figure out the valuation of Tesla stock then. If the stock's $188, divide that by what would I say, $4.50 or so, you're looking at a forward multiple, but 12-month multiple of 41.77. But this is where things get crazy because you can make up any kind of valuation that you want. How people are justifying NVIDIA's valuation, ARM's valuation, SMCI's valuation is they're going out to 2028 and they're like 4 years down the line and they're saying, hey, Tesla stock, or not Tesla, they're not talking about Tesla at all apparently. They're saying NVIDIA and SMCI, you're buying it for 30 times 2026 earnings. So I'm going to do that for Tesla. On the high end, the estimate is around $9 for EPS for 2026. The low end's about $2 or so, $2.50 or so. That's insane. I just want to be clear. Elon has made this very clear to me. Maybe I'm the only one that's listening. The last 2 or 3 earnings calls, Elon has stressed the only thing that matters is the monthly payment. For an example, would you care at all if you could buy a Model S, let's call it, for $100,000? I know they're a lot cheaper now, but we'll use this as the analogy. You could buy a Model S for $100,000. It costs you $500 a month. Fantastic. You're going to buy the Model S. Or a Model 3 that's $35,000 today and it costs you $500. I mean, wouldn't you rather go with the Model S, right? Even if it's the higher price, your monthly payment's still the same. It's affordable. It's $500. And I think that's a great point that Elon has been stressing. As rates do fall, Tesla will actually raise prices. That's essentially what I've gotten out of what Elon has said. So I'm expecting by 2026, you're going to see the $25,000 vehicle, and likely even by then in the back half of this year, Q3, Q4, you could see Tesla start to raise prices. 2025, Tesla's definitely going to be raising prices, in my personal opinion. By 2026, pricing could be, quite elevated compared to where it is today, again, because rates should be a lot lower. by 2026. The Wall Street consensus estimate for 2026 EPS is $5.31 per share. I think it's going to be closer to about $9. I think that's pretty logical. So if you consider 2026 EPS could come in at $9, that means Tesla's currently trading at 20.88 times 2026 EPS. Well, wait, go ahead and times 9 by 42. You're at $378 by 2026. Well, wait, if rates fall and capital becomes cheaper, and it looks like estimates are going higher at this time for EPS, Tesla stock could have a multiple that's back to 60. We were just at 60 like 2 months ago. That could put Tesla stock at about $585 by 2026. And that's just getting back to the same multiple that we were just at, around 65, with $9 of EPS in 2026. The historical multiple on Tesla is about 120 because, back in 2020, 2021, Tesla was trading at about 1,200. 2022, Tesla was trading at like 200, right? 2023, Tesla was trading at like 80. So when you average that out, you're at roughly 120. Now, back in the day, before Tesla was profitable, well, you can't really calculate the multiple on that, but on any other metric you can calculate, right? Price to sales, price to EBITDA, you're trading significantly cheaper now than you have ever traded before. So 120 times multiple is, well, cheap for Tesla historically. Who knows if we ultimately get back to that? But I think inevitably we do. And plus, by then, 2026, we should definitely have some clearer guidance on the Robotaxi network. FSD V12 should be hopefully level 4, level 5 by then, right? It should be in a much more advanced, developed pace or scale than it is today. Times that by 9 for your EPS number for 2026, you're looking at Tesla stock over $1,000 by then. I mean, so that's precisely why I just bought the dip in Tesla stock. But could Tesla stock go lower from here? And again, yes, it could. I think your downside is a little bit more limited, right? I think 165, that would be quite a bit of downside from your all-time highs, right? That would put you down almost 75% from your all-time highs. Could that happen? Of course. That could even happen relatively soon, this week perhaps, if things do not go as planned. But then you start to get egregious. I mean, 150? Is that really where Tesla should be? Are you serious? 100? Are you serious? Right? The lower you get from here, it's just an easier and easier buy. At the same time, Tesla stock continues to fall into even the end of the day. Nvidia stock, for apparently no reason, is now up 6.25%. Apple still down 3%. Google still down about 3% as well. So I did think this was urgent matters that I wanted to make this video as soon as possible for you guys to really break down what's going on, what I am doing, what I'm expecting here. Again, could the stock fall more from here? Absolutely. I'm expecting a lot of people are going to be bearish. I'm in the comment section. I'm expecting a lot of people are going to hate on my decision to buy the dip in Tesla, but honestly, I really don't care because I'm much more comfortable buying Tesla stock at 187 than buying Nvidia at almost 900. I think you are playing with fire. It is musical chairs. If you're buying Nvidia, if you're buying SMCI, if you're buying even Intel or Dell for that matter, the AI hype will roll over, and probably pretty soon. When that does happen, I would expect a more broadening out of our markets and for capital to go back into the areas in which it's leaving today. Even Apple, Google, Tesla, small, mid-cap stocks. I think that is likely around the corner. And I do think, again, the downside is limited from here. What, do we fall $40 from here down to 150? Of course that's possible. But at that point, do we fall another $40 from there? Yeah, probably not. Where's the next $40 from here? I would argue it's probably higher. So I don't want to wait and try to time the bottom. I want to start scaling in now with the dry powder that I've been waiting for, to use on the sidelines in Tesla. I really wasn't buying Tesla, in even this bounce that we had seen from here to here because I figured at some point we would likely fall as markets continued to hit all-time highs. And it looks like that has just started. But again, it's all going to come down to the data coming out tomorrow and what the Fed just said today. Oh boy, you do not want to miss that. He's kind of giving us a heads up on what to expect tomorrow and what to expect maybe from Fed Jerome Powell. And we'll go over that as well as all of your specific Tesla stock news today in the next video coming out at 8 p.m. tonight. Usually it's 8:30 p.m., but I'll get that video out a little bit sooner so as many of you guys can watch it as humanly possible. Hit the like button, subscribe to the channel if you guys want to come trade with us. Check out the trades that I made today. Link down below in the description of this video. You guys have a fantastic rest of your day, and I will see you in the next one.